about stocks, indices, or anything from a technical viewpoint. I'm a pure technical analyst. Here's a picture of my website, thetechtrader.com. And if you start a free trial, come in for 2 weeks for free. Just sign up, no credit card, and join the club. And I think you'll have a lot of fun and make a lot of money. That's my little spiel, but I really want to get to looking at charts today. So feel free to ask any questions. Looks like someone here has a question on APRN. Is that correct? Well, that's got a problem. Let me show you why. First of all, APRN was a swing trade for us when it broke out and pulled back. I told my people it was an excellent buy near support under 5. Within a couple of days, it popped to 693, pulled back again, and it was another trade. I got everybody out near 8. That was my target. And you can see the stock collapsed. At this point, put a fork in it. I mean, look, the stock's oversold at key support, and it might get a bounce, but I never catch a falling knife. It is dangerous. Stocks that come down like this can bounce briefly, shortly, and then get hammered even lower. Something's really wrong here, obviously. And to move from 8.25 to 272 inside of 3 weeks is a total disaster. If you buy it here, it's pure speculation, and you risk the stock going down to $2 or less. Something's really wrong there. We have questions on NU and a couple others. Let's take a look. NU, well, it was looking good for a while. I want to point out that this stock here, when it broke out and then pulled back and broke out again, was right at a key resistance level. So the 590 area, 588.90 is a triple top. What is not good is that it broke a trend line. And then it came down to a support level and tried to bounce. But this is called a kissback. Anybody that knows anything about technical analysis will let you know that when a stock breaks a trend line, even if it bounces off support, if it doesn't get back above that line quickly and rolls over, it's over. In other words, the stock may have to come down to 3.75 or even 3.25 and test these lows or maybe broaden the base pattern. For now, what I would look for is a close-up view as to whether or not across that line it can make a move. And if it does make a move, watch for resistance at 545, 560, and the double top at 580. Once you get to 580, you're on your way to a much bigger move. Then you can take this and make that the trend line. That is possible that on a longer term basis, you're looking at a trend line, something like that, or a trend channel. But it's not my cup of tea. I like it overall, but it's not, for me, there's many, many better trading vehicles out there. ISCC. Now, I know this company very well. ISSC, sorry. I know it very well. I got some of my institutional clients were on this stock. They told me all about it when it was trading at 6, 7. I like the technicals on it. And this is what we call an ascending bull wedge. And it's ascending because the bottoms are ascending. Even the tops are slightly ascending. It might even be called a bull flag. It doesn't really matter. But it's a continuation pattern. However, any move that goes from 577 vertically to 915 in 6 days is going to take some time to digest, and that's what's going on. What I do like about this consolidation is that the underlying technicals are green. The on-balance volume is actually increasing during this pattern. It's being accumulated. Your next target on a breakout, and first thing you want to see is above 925. Then your targets are 10 and probably 11. But the measure moves even more than that. Let me show you something. In technical analysis, moves tend to happen in increments, meaning the same increment. This move from 577 to 915 is about 340. If you take the pullback low and add 340 to it, around 8, you're talking 1140. So what I would do is put a line at about 1140. And my projections, should it break out with volume, meaning if I see heavy volume and I need heavy volume, but if it gets above, say, 9.25, 930, the first thing to do is test the resistance from the May high at 990. Once it gets past that, you're looking at 1140. That's the measure move that equates that move and adds it onto there and brings it up to there. So that's what we call a measure move in technical analysis. And also, more importantly, on a long-term basis, going back 9 years, that's also about 9.25. So a breakthrough 9.25 could be powerful and complete a 14-year base pattern, which really can enable a much bigger move on it. And I'm hearing a much bigger move may be coming. So this is a very bullish chart, one that I like a lot, but I'm waiting to see if it pops out of there. It looks great. Another question is on SOFI. Now, SOFI looked great here, and I'll show you what it did. It was down in about a 9-month or 8-month declining channel. It formed a double bottom base. It broke out there on a major breakaway gap and formed a little flag. I actually put a swing on it with a stop under there, and it was stopped out very quickly. And look where it did after it stopped at 785. It went down to 4 and change. This is why you cannot trade without stop losses, folks. You just can't. You do that, you're asking for a problem, big one, because all it takes is one big loss to wipe out your portfolio and your buying power. Now, if it's going to turn around, the first thing I want to see is a breakout. The first thing you want to do is take out a prior low-high area, meaning right now resistance is at this low that was broken, because support becomes resistance when it's broken. Here's where it broke support. That low was 557. This recent high today, 557. How about that? So if it gets to 557, your targets are a test of 590, 6.25, and then 660. Those are my targets on it. But again, there's so many bullish looking charts. I would much rather be in something else. You're welcome. I got a question on Google. If you look at a daily chart on Google, number one, it's a perfect Elliott wave, 1, 2, 3, 4, 5 wave decline. So I look for 5 waves down because once a stock has 5 waves, it tends to base or reverse. There's a big gap in here. The stock testing it. If Google breaks down underneath 96, my target is 86 to 87. What I need to see is after 5 waves, a thrust that comes up through 106, 6.25 area. And then it's going to have to take the 50-day out at 110 and the declining tops line at 115. So 106, 110, and 115 are not only your resistance levels, but your targets for Google. You're welcome. Any other questions, folks, on any stock? Any index, anything? Well, there were some questions earlier, it looks like. And that was for the prior candidate, for the prior person. Okay, we got a question here on Snap. Obviously, a pretty ugly chart. What the positives are is that this is what I would call an exhaustion gap. Made a lower low, bounced to resistance. Why is that resistance? We'll take a look at the line I drew. It comes across that low and this low in here. Tagged it, came down. Tagged it again, came down. So what do you need to have on this stock? I'm not going to be bullish on Snap till it gets over 1280, 1290. Sorry, make it 13. Once you see 13, your targets are 15 and 16.75. For now, the positives are it broke its declining channel. And it did it with a breakaway gap 2 days ago, but the volume wasn't big for me. The underlying technicals are flat. Do I like this? Meh, not really. Like I said, so many better looking charts. It will be better, much better over 1285.90. So not excited about it. Well, I like Finger, but we traded it today. But I want to be really careful with you guys on this. Okay? If you look at Finger on a day trade today, this is one of my day trades. I have a day trade site called thetechtrader.com where we mostly day trade. We do some swing trading. Now this morning, I want to point something out. Pre-market, that was yesterday late. After hours, it came down. Okay, but then it turned around. This morning, the market opened and it dropped down. It spiked up, and when it got to this level right here, I want to point this out to you. One way to show you this best is to go back in time. This is what it looked like. It looked pretty ugly, didn't it? It then popped out above the moving averages. Notice they're crossing over. My first rule is when you see moving averages cross over, look for the first pullback. We had a 2-minute pullback and it popped. And we had like a 5-minute consolidation wedge and then it popped. This is a tough one to read this today because it kept going without much pullback. Here's where we got interested. I saw a run that went from 5.25 to 8.33. Let's call it 3 points. When it pulled back and held and held and held, I said, watch this pattern for a breakout. It broke down instead. But there's where it broke out. So I said, I'm looking for 3 points off the low. Now, I don't know if it goes there, but the measured move is 9.5, 940. It reached 8.49. A nice move, but it reversed. And I also told everybody, keep long unless this line breaks. That's support. It actually formed a bull wedge here. See it? Or a bull coil. It tagged 879. Didn't quite get to my 940, but when this volume came on the downside, I told everybody to be careful and set your stops under 8. It got down under 8. Oh, I'm sorry, it wasn't under 8. It was under this line. 765 is my stop. Eventually, take a look. My target was 9, right, folks? 936 was tagged. That's where most of us got out, 9 or better. So that's the day trade. Now, and I'm assuming you want to know what's going on a daily chart. I got to tell you, folks, do not chase